Hello and welcome to another update video about the S&P 500. Today we don't want to take a look at the SPX chart, I just want to look at the ES futures, a chart that obviously is tradable. The SPX cannot be traded, so want to take a look at my viewpoint here. Obviously we're covering the S&P 500 on a daily basis in our S&P 500 and stock service. If you're interested in that, check it out. Link is in the video description. You get daily video updates, written updates, intraday updates. Plus, there are regular updates about 20 stocks as well. Now, this is obviously a chart I'm monitoring every day, also on an intraday basis. So it's quite a dynamic chart. Important to understand is that down here, that was end of November, no, end of October, not end of November, end of November. We've been watching for a radical rally, quite an aggressive rally, okay? I posted it on Discord for our subscribers on the 26th that because the move down was likely, so either a correction, yeah, but in a more bearish scenario, it would have been a diagonal pattern. And when a diagonal pattern finishes, so even in a bearish scenario, we should have seen a very aggressive corrective rally, which happened, okay? And obviously in a bullish scenario, which was also valid, also a rally. So basically we called it a bottom, a low down there, and expected an aggressive rally in the coming weeks. Now, in all fairness, I didn't expect it to be that aggressive and to be that fast, okay? I thought it would take, I don't know, 4, 5, 6 weeks to get into resistance. Now we did already overshoot that initial resistance. I think we did overshoot it this week. So, you know, don't want to say, you know, we forecasted everything, but we forecasted a major market turn down there. It just moved a little faster and a little further than initially anticipated. So I've been looking for deeper pullbacks in the last few days, which I think was reasonable. And I think that pullback actually happened, but it was very, very shallow. It was, if you look at this, so obviously we've been monitoring the S&P 500 on a daily basis. So the idea was, yeah, we moved up here. That looks like a full impulse, or even if it's just an A wave, a 3-wave move, a deeper pullback should occur. Now, if we measure the retracements, I mean, it didn't even reach the 23.6 the 23.6 retracement level. So extremely shallow. I mean, you know, it's all about ideal structures, right? We can, you know, anything is possible. Not everything is probable. I think it was not that probable that we get such a shallow pullback only. But there you go. That's life. That's trading. Nevertheless, we forecasted a rally. The thing is, though, that with that shallow pullback, I mean, it can sometimes happen when the market is really, really oversold. And that was the case down there. So that is the explanation I have. So now the idea is, right, where are we heading? So we don't want to stand a rally like that in the way, of course. I've got 2 wave counts that I'm monitoring basically right now. And these are the parameters that we can watch in the next few days, okay? So obviously I'm looking here at the 1-hour chart. This will change as we go, but it's pretty impulsive price action to the upside. So I'm watching 2 patterns, yellow and orange. They are both bullish at the moment, okay? And first of all, the orange wave count. In the orange wave count, we topped in an A wave here on the 3rd of November, came down in a B wave, and we're now likely moving up in a C wave. In this scenario, I would like to see it reach normally at least the 1-to-1 ratio, 100% extension level at around 4,640. The problem I have is the micro count. Okay, so if I zoom in a little bit, the micro count doesn't really add up fully here. It doesn't really add up fully. I've got a wave 1, I've got a wave 2, I've got a wave 3. I mean, that can still extend a little, but let's assume we come down in this wave 4 now. Then there's really only the wave 5 left. And it would be a super long wave 5, or it would have to put in a very long wave 5 extension to reach that 4,640 level. I mean, it doesn't need to get there, but a C wave ideally reaches the 1-to-1 ratio, right? So that's that scenario, which I'm not too convinced about. And the problem is just that this here isn't really long enough yet. Okay, it can still, maybe it's extending or whatever. So anyway, the orange wave count is going to be valid. as long as we are now holding the 4,474 level. That's the 50% level of that rally here, okay? That's important because in any wave 4 pullback, the 50% level should not be broken. And then we should get a fifth wave to the upside. And if we get that, then we can call it an ABC. And that would complete a larger A wave, which would then generate a deeper pullback in a B wave, in a C wave rally higher. Why ABC, you're asking? Well, because the entire move up of the October 22 lows is likely a diagonal. So also the fifth wave, if we say we bottomed in a fourth, and the fifth wave to all-time highs needs to be an ABC structure. If you're interested in joining our Patreon service or S&P service, then you will be able to access all the live charts depending on which tier you're choosing, and you can get a good idea of the overall context of the chart and things like that. So that's one scenario, but it needs to hold 4474. That's one of the key parameters that we can be watching over the coming days and weeks. And we need to see a break above 4576. That's a key level. Yeah, that needs to be broken for me to tell me, okay, it's not the yellow count, it's orange, which is likely playing out. Okay, now let's get to orange, which is it's orange. So we need to break that level to say it's orange. Now let's get to the yellow count. The yellow count is very similar, but it will extend higher. But before extending higher, it needs a deeper pullback. So obviously I have no crystal ball. I can't tell you if that's happening, but in this scenario, we are only working currently on wave 1 of that C wave, okay? So it's a bit of a different count. It will extend much further more directly, but it would get a pullback before breaking above 4576. So in this scenario, that's why I'm watching this yellow support box. If we break below 4474 now, or very soon, then it's likely this pullback in a wave 2 of C. And after that, in a third wave rally, we would break above this pivot here and would rally maybe into the region around 4,700. We'll then get a fourth wave pullback and the fifth wave. And the difference is just how high will we go more directly without a deep pullback. Because in the orange count, we can get a deep pullback soon. That can be quite deep. Whereas in the yellow count, we will do the entire journey here without deeper pullbacks. The pullback will happen before breaking above the red zone in the yellow count. And that would be basically the next entry point, yeah, if anybody's likes to trade pullbacks, which is also when I will consider an entry. Now, the thing is, basically what I'm watching for is a break below 4474. If that happens, then I will monitor very closely the structure of the decline. If it's a corrective decline, and that's very important, it needs to be a corrective decline, any impulsive decline from here will set us up for a potential crash, really crash, okay, because we are so much extended to the upside. If we now see an impulse down, it's going to be dangerous. But if we continue to see corrective pullbacks, and if that corrective pullback goes below 4474, then I think we're dealing with a yellow count, and that wave 2 could provide a nice pullback entry to trade the third wave. But I cannot add here a support area or anything because we haven't topped yet likely. So I do that obviously on a daily basis, intraday, in our S&P service. But yeah, so I think the message is, I think there is, due to this action that we've seen over recent weeks, it's a really good chance. There's a really good prospect for a rally potentially into 2024. Not without taking breathers. So there's a constant up and down in the market, of course, but there's a good prospect, I think. However, which exact path the market will take, that's obviously constantly developing in a dynamic way. Important to understand is that I think in this current structure here or market, any corrective pullback could be an entry opportunity, a long opportunity. However, if from here, before breaking above the July highs, we see any impulsive move down, I would be extremely, extremely careful. Yeah, that's my update about the S&P 500. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Yeah, and if you want to be kept up to date about the S&P 500, SPX chart, ES futures charts, then check out our S&P 500 and stock service. Have a great evening, day, or morning, wherever you are. Thank you very much. Bye-bye.